How we get on, people? Welcome back to the LAGFX channel. As you guys know, I am currently running a mini series around trade management. So in today's video, we are going to be discussing partial closes, why we do them, how we do them, when we do them, and some of the calculations behind them. So if you are unsure what partial closes are or why we do them in the first place, this video is for you. So there are two reasons as to why I personally take partial closes. One, to maximize profits, but two, to remove as much risk as possible from the running trade I have. Now, I might be wondering, well, how does this work? Now, let's say that we are involved in the markets with a position. Price is trading in the direction we want it to, but it's showing signs of potentially reversing. What we could do is take a partial close, so closing a percentage of the position to one, bank profits, but two, to remove orders from our running trade, which minimizes the risk exposure. So if we are risking 1% of our equity with a 0.10 lot size, if we were to remove 0.05 lots from the market, we are now only risking 0.5% from the running trade. Why? Because we have closed half of our 1% risk position. Now, what we've also done is we have banked profits. So if, for example, the trade is in 1% worth of profits, we take a partial for 50% of the trade, essentially cashing out 0.5% profits. We only have 0.5% left running in the position itself. So if stop loss was to hit, we would break even. Now, this is just a great way to mitigate risk whilst allowing ourselves to take profits throughout the running trade. Now, when we pair this with stop loss moves, it helps us generate some amazing returns whilst keeping that risk exposure to a minimum. Now, just to provide some calculations and some examples here, let's say that our position is in 3 RR worth of profit, right? We're only risking 1% of our equity. That would suggest that our trade is in 3% profit at the moment. If we were to close 50% of our running trade, that would leave 50% still in the markets. But it means that we cash out 50% of 3RR, which is 1.5%. Now, with us removing 50% of our 1% risked position, we only have running 0.5% left risk in the market. So now at this point, worst case scenario, we don't move our stop loss to entry, we don't apply any other safety measures. If price was to reverse, hit our stop loss, we still walk away with 1% profit from the market, which is what we were risking initially. Why? Because the 0.5% that's left running would go against the 1.5% that we've cashed, leaving us with 1% in returns. So me personally, I take a 50% partial when my trade hits 3RR. This just means that I can allow my trade to breathe without having to move my stop loss to entry, which gives price full range to do what it needs to do, but it also guarantees that I walk away with at least 1% from the position. Now, let's say that it's a 10RR trade, okay? We've cashed out 50% of the trade at 3RR. That means we've cashed out 1.5% from the position. We still have 0.5% running in the markets to continue to generate us with further profits. So when our 10RR take profit is achieved, we walk away with an additional 5%. So as a whole, we've walked away with 6.5% from a 10RR trade. All the while, we have no exposure in the markets, we're at no risk of taking a loss from the position we've placed, and we are allowing our trade to breathe completely, taking us into a slight drawdown, clearing areas of interest, clearing our entry point before going on to take profit. Have you ever placed a position where you've moved your stop loss to entry too early, price has swept your entry point and then gone on to take profit? Well, with this strategy, you don't have to worry about that happening. Have you trailed your stop loss too tightly to the point where you've been swept out, price has gone on to take profit without you? Well, with this strategy, you don't need to worry about that. This allows us to maximize our profit potential whilst really retaining any risk from the markets. So I've told you why we do it, I've told you when we do it, and I've given you some calculations to run by. Now you might be wondering, well, how do we do this? So first and foremost, we need to calculate our risk to make sure that we are only risking 1% of our equity. So let's say that 1% risk for a position we are placing with a 20 pip stop loss gives us a lot size of 0.5. We know that every 20 pips we are generating 1% in returns. Why? Because 20 pips minus is a 1% risk. So 60 pips plus would be 3%, right? So when the trade hits 60 pips in profit, that's when we take our partial for 50%. So we close 0.25 of the trade. Why? Because our overall position was 0.5. Half of that is 0.25. That guarantees our 1.5% profit whilst allowing price to continue to go on and generate further profits. Now, just giving another example, if a 10 pip stop loss was 1% risk at a 0.2 lot size, when price hits 30 pips profit, we know that price has achieved 3% or 3 RR, right? So we can close 0.10 lots, as that's half of 0.20, to cash out 1.5%, allowing us to leave 0.5% exposed to the markets whilst banking some profits. Now, I hope those calculations make sense. If you want me to go into greater detail into risk management, calculating risk, and supplying you guys with the 1% formula that I use for every position I place, I am more than happy to do that. But there are videos on our YouTube that go into great detail around risk management. But if you want me to make an additional one, I'm more than happy to do that. Just leave it in the comments down below. So just to recap, why do we do this? To maximize profits, to minimize losses. How do we do it? Just explained it here on how we take partials and when we take partials. And I've also ran through some of the calculations behind it. Now, I hope this video makes sense. If you guys have any other questions, please leave them down in the comments below. And if you have enjoyed, don't forget to leave it a thumbs up. With all that being said, I'll catch you guys in our next YouTube video.